Hey YouTube, Simon Dixon here, and today the European Union parliamentarians, members of parliament, will vote today to introduce their new rules for cryptocurrency markets. And one of the most controversial clauses is the potential to ban proof of work as a mechanism for promoting more carbon neutrality and energy efficiency and environmental friendliness. And so today we're going to be discussing that, and I'm going to be discussing it from three aspects. Number one, how it affects Bitcoin. Number two, how it affects the EU. And number three, how it affects you. So let's jump straight in. So first thing, Bitcoin. Let's use this as an educational experience. So Bitcoin, a lot of newbies coming over. The network effect of Bitcoin has been stronger than it's ever been. The need to own your own money, spend your own money, and have a monetary policy that cannot be changed, that is enforced by maths and code, only exists and works because of proof of work. So for those of you that are not too familiar, proof of work is the mechanism by which rather than having a big central bank or a big clearinghouse like Swift, then anybody can fire up a computer in the early days and they can start running an algorithm, and what happens in the background is you expend electricity, and in exchange it solves problems, it audits the entire network. You keep a copy of the entire blockchain, and there's this node infrastructure. Don't want to get too geeky into it, just what you need to know. And by that, you have copies of every single transaction that's ever happened in history distributed across the largest supercomputer in the world. Originally, you could do it on your laptop. Then you needed to put specialist graphic cards known as originally CPU and now GPU. And then specialist equipment was made, which took a lot of the industry over to China, because China was having one of the most efficient electricity costs, as well as the equipment, many of the mining equipment. Now, so that's proof of work. Proof of stake is where you get to, so proof of work powers the network, it audits all the transactions. It's what makes Bitcoin work, and it's what makes it not be able to shut down by any whim of anyone that has one policy, because you have to achieve consensus across the whole network in order to make a change, and it's virtually impossible to change unless you get massive consensus across the network. So the likelihood of Bitcoin getting consensus to switch to another thing called proof of stake is highly unlikely. That proof of stake is where you having a stake in the network is what gives you control over the network. So if you accumulate a large stake, you accumulate more control. And if you look at the alternative cryptocurrency world, you see coins and articles every single day from people that have done some way of manipulating a proof of stake network. We're even seeing use cases right now where those that own stakes are voting in order to remove somebody's coins from their blockchain, and it really is driving the world more to, if you get the network effect wrong, more like central banking really. Then you have large pools of exchanges that own lots of stakes on behalf of everyone else, or an ETF that owns coins for everybody else, and all sorts of stuff. And so it is very experimental, and there's lots and lots of alternative coins experimenting with all sorts of stuff. And once one of them gets it right, I don't think anyone's got it right yet, then maybe if it was required, there'd be a model like with Ethereum from switching to proof of work to proof of stake. Absolute nightmare. And you've got to get consensus from the network. So what does it mean for Bitcoin? Well, firstly, Bitcoin will carry on giving you the ability to own your own money, spend your own money, and will have a fixed supply. And proof of work will continue, whether the EU bans it or not. Whether they drive out all of the miners from the EU, whether they make it difficult for people to convert their euros into Bitcoin, the regulation affects the financial institutions, not the protocol. The protocol continues to do what it's done, because no matter what the EU says, no matter what any politician says, it still continues. So Bitcoin will continue on proof of work no matter how anyone votes. So that's the first thing. So let's use this as an education. You can carry on lobbying the EU. They vote today. And I'm sure many people are voting on things that they have no clue about or know or understand how to do it. And of course, all the altcoiners will be going out there saying, see, this is why we're digital hard sound money. But there's only one digital hard sound money, that is Bitcoin. And there's a bunch of stocks and shares and all sorts of stuff that people gamble on in order to eventually try and accumulate more Bitcoin and prove different types of models for different types of use cases. But there is only one digital hard sound money. So you'll see the rhetoric there coming from people's vested interests. Okay, so that's what it means to Bitcoin. Bitcoin continues, Bitcoin does what it does. Bitcoin is not a company that the EU can knock on the door. You have to get consensus. Welcome to democracy, EU. This is how it works in a decentralized network. Secondly, let's do the second one. What does it mean for the EU? So we already have the use case. The use case, we have seen it before. We've seen it play out many times. So if you think about China is probably the most prolific country that has exercised some kind of ban on mining because they had a lot of the mining in the industry. The second that they decided to ban the mining, they violated the model that made China so successful. What is the model that made China so successful? Well, the model that made China so successful is being able to produce something domestically at a more cost-effective rate and export those goods globally. So China was creating Bitcoin at a cheaper rate than all other countries and exporting those Bitcoins through Bitcoin miners. And so Bitcoin miners, got to be careful with the language. China wasn't actually doing it. They just had an environment to do it. And the miners go wherever the environment is most suited to meet those needs. So the Bitcoin mining industry essentially had an exodus away from China. The corrupt officials got their little backhanders and allowed them to continue. The ones that weren't corruptible, those companies decided that rather than pay the backhander, they'll go to another country. And there ended up with this more globally distributed, more efficient, more distributed version of Bitcoin, where there's miners all around the world. And an industry occurred in America, and America now is putting together their next investigation on the future of money and the policy implications that will follow, that I covered. If you haven't watched it in the emergency broadcast, went through the exact results and how it fits in with the geopolitics on this YouTube channel. And so what will happen is you could make it where it's, firstly, you can't say, hey, Mr. Bitcoin, Mrs. Bitcoin, knock. Please switch from proof of work to proof of stake. Not going to happen, not going to work. There is no door to knock on. It is the very reason that proof of work exists, so that nobody can have undue influence on that. And that's what makes it digital hard sound money. And so what does it mean for the EU? Well, if the EU does it, it means that all of the businesses decide to migrate somewhere else. Then they have this enforcement action, just like drugs are illegal in many countries in the EU. They then have this whole force of figuring out how they enforce making Bitcoin illegal when people can own their own money, spend their own money. Well, you do it at the exchange level, and so you migrate a whole industry over, and then you take all of those exchanges that had all of the data that you needed in order to collect tax, and you give it to another country. We've seen this many times before. And then all the data goes to another country, all of the industry goes to another country, all the jobs go to another country, and you end up with a legacy financial system run by the European Central Bank, implementing central bank digital currencies, and the industry and everyone and everything that happens out of it goes and happens outside of Europe, and you have this huge war on drugs type campaign of enforcement that you need to exercise in order to stop people making voluntary decisions with their finances. Countries like Ukraine that want to join EU, that depended upon Bitcoin and cryptocurrency industry in general, you essentially lose all of the innovation and the lifeboat that comes from embracing the Bitcoin industry that really is anti-fragile. So we've seen it all before. You get these effects. Now, what does that, so that's what it means for the EU. The much better thing to do is to try and support your goal to preventing money laundering, which is by regulating the exchanges, which is the point of this legislation, so that you can collect the data. And let's not forget what the real tax code, the code word for that is then you can collect the tax. So much better for EU to collect the tax by supporting an industry, by controlling the on-ramps and off-ramps, which is the point of this legislation, rather than trying to overstep your influence on the protocol, which you cannot regulate. And so it becomes this unenforceable, very challenging, complete ginormous mess. And you will end up reversing that when you realize the effect that it has on both you, the individuals in your country, the companies in your country, and your country itself as geopolitics unfolds and Bitcoin's demand becomes greater and greater and greater, because it gives people the ability to own their own money, spend their own money, and have a money supply that can't be changed because of proof of work, not because of proof of stake. If you want to move everything to a speculative frenzy, then you can there's already many cryptocurrencies that fulfill that, but robbing the world of digital hard sound money is going to have a huge backlash, and it won't work. So number 3, what does it mean for you? So if you are one of those people that are panicking, saying, the EU is going to ban Bitcoin, sell, then you were not a Bitcoin thinker in the first place. You were a fiat thinker. And a fiat thinker means that you were seeing Bitcoin as a mechanism for earning you more euros. And a fiat thinker is somebody that doesn't understand the power of owning their own money, spending their own money, and having a fixed supply yet, so they become a trader. And a trader is somebody that says, what can I do with my money in order to earn more fiat? And that thinking is going to be the very same thing that, I guess, being a fiat thinker and a trader are the reason why you probably are in the same financial position that you were before entering the crypto markets. Because the shift comes from being an investor and understanding long-term geopolitics and the demand for owning your own money, spending your own money, and having a fixed supply that depends upon proof of work. Now, I know that you're going to have lots of rhetorics, and you've been watching YouTube channels that's saying, oh, Bitcoin's slow, it's inexpensive, it's going to be replaced by all of these different things and all of these different rhetorics, and it's environmentally inefficient, and you're trading around, you're going from one to the other, and you're paying tax, and you're creating all this mess, and the price is crashing, and you're going up, and it's a speculative frenzy, and you're saying, screw this, crypto's a scam, I lost loads of money. Step back, calm down, hit the like button on this video, subscribe to this channel, hit the bell symbol, hit all, and we'll learn why the wealthiest of the wealthiest are all looking at Bitcoin right now, as well as those in the streets of El Salvador that don't have a bank account, that are now accepting Bitcoin as payments and are financially included, and the middle class and everything in between that are looking to build and protect their wealth by understanding the demand for digital hard sound money tends to go up over time. Just step out if you want to understand the historical performance of Bitcoin. I'm not saying the future equals the past. I'm saying I believe that I'm putting my funds on that. And just go to a chart of Bitcoin to the dollar, if you're a fiat thinker still, and put it into a logarithmic chart, and you'll just see this 13-year cycle that cuts out all the noise, and all the noise, everyone in between, they traded, they created taxable events, they went in and out, they created an absolute ginormous spaghetti mess for themselves, thinking by listening to all of these different people, giving them all different rhetorics. And you'll hear the rhetorics all today. See, we told you proof of work. That's why you got to get out of Bitcoin and you've got to get into Ethereum. Thinking that Ethereum is some kind of competitor to Bitcoin. It's not. It's a completely different use case. There is only one digital hard sound money that exists today. And then everyone's going to be telling you, yeah, but what about if they shut down the internet? We're going in war and you need to put everything into gold and proof of work is going to become illegal. And then they're going to introduce Fedcoin. And when they introduce Fedcoin and EU coin, calm down, calm down. Fedcoin and EU coin are a war on banks, not a war on Bitcoin. The giving people currency that is digital, that doesn't allow you to own your own money, doesn't allow you to spend your own money, and is not created by debt and does not have a fixed supply, is raging war on banks. Banks create digital currency. Banks already create the digital euro. If the central bank decides to create the digital euro, then they are raging war on the banks, which pushes the need for Bitcoin long term. If you're a short-term trader, then the price might crash and then you might say, oh, I got to get out. You might also say, oh, I knew I should have bought gold. Gold's going up and we're in war and it's going, and Bitcoin's going down and all this type of stuff. Calm down, calm down, calm down. Bitcoin is not competition to gold. I know that everyone would like to think that. Bitcoin is a more speculative store of value that has a more fixed supply and allows you to transport digitally. Yes, the internet might get shut down. We'll have much, much bigger problems. Does that mean you don't buy Bitcoin? No, it means that gold is a very good use case for preserving your wealth, not increasing your wealth. It's been doing it for 5,000 years, and wealthy people that don't want to get more wealthy preserve their wealth and their purchasing power in gold. I don't expect that use case to change. It's not going to make you wealthy. It's going to preserve what you've got. Versus fiat currency, which will always go down in value because its supply always increases. But remember, as the price of gold goes up, more people mine and it increases the supply of gold. That's the mechanism that is used in order to regulate the supply of gold. And when you are in lockdowns, you may not be able to access it because it's hard to store if you have to store it in custody. And it's very, very challenging to transport around the world without using some kind of system that exists on top of the gold in custody. Does that mean that no one should own gold? No, if the internet gets shut down, then gold would be a very, very useful thing to own. Does that mean that you use the fact that the internet could shut down not to own Bitcoin? Ridiculous thought. Ridiculous. You don't, I mean, how many of you, you're probably the same person that was told that the dollar's going to crash, and therefore you didn't realize that central banks could actually prop it up for a very, very long time and introduce central bank digital currencies to take away all your freedoms but prop up the system. And therefore during the whole time you're probably the same person that was sat there waiting for years for the system to collapse and therefore didn't. It's called asset allocation, asset protection, asset management, and no one uses one rhetoric in order to go in and out and do that. So if you want to learn one thing, stop being amateur. Amateurs, they take the news, and I used to work in the markets, I know. When I was investment banking, when I worked in trading, we used to get the rhetoric that was coming out. We used to push prices up and down, manipulating people and markets based upon the fact that people are just short-term, don't understand the rhetoric, and just trying to get in and out, trade. Traders, 90% of traders lose money, 10% might make money, and most of those are insiders. So stop playing the game. You can do it if you want. Take a percentage of your wealth and gamble it. I know it's fun. If people want to do that, I'm not here to stop you, but that's not investing. That's not wealth protection. That's not wealth creation. That's gambling, and it's okay. You can bet your future on gambling, and you can bet, all right, Bitcoin is going to crash today as a result of what happens in the EU. But then those people are the people that I've seen over the years that end up with no Bitcoin. So here, do yourself a favor. If you would like to understand long-term sustainability on how to build and protect your wealth, then I give you all the tools. Go to retirementplanb.com/book. And at retirementplanb.com/book, you can download a 4-part video series that goes through how to think more professionally about the geopolitical environment and how to protect yourself from inflation, deflation, economic growth, economic decline, bank sieges, sanctions, bank failures, financial crisis, wars, and all sorts of stuff. You can also get a copy, it's called Book because you can get a copy of the book that protected a lot of people over the last decade, called Bank to the Future, Protect Your Future Before Governments Go Bust. Anyway, back to EU. So let's go through, let's summarize. What does it mean for Bitcoin? Absolutely nothing. If you're a fiat thinker, it means the price may crash and then go back up long term. And then you have, Bitcoin has proven that whatever you throw at it, it finds a way of adjusting. What does it mean for the EU? It probably means that they flip-flop wherever they go and then realize that it's probably better to make the companies more efficient, make sure that they're using efficient forms of energies, and regulate exchanges so that they can implement their goals of anti-money laundering and tax collection. And that already exists, so it's absolutely no change. If you want to put some kind of enforcing on companies, that's why proof of work exists, because a protocol is not a company, and a company you have to follow within the laws of company frameworks and regulations and licenses. But protocols, just like the internet, exist as long as you have a secure mechanism for making sure they exist, which is proof of work. And proof of work is a global phenomenon. It doesn't recognize country borders. And so you can carry on doing that. Whether you flip-flop, that's great. So what does that mean for you? It means an opportunity to accumulate Bitcoin at a cheaper rate, because I believe that the demand for money you can own, money you can spend, and money that has a fixed supply continues to increase. Whatever the short-term news is, whatever panics you, whatever is designed to make you move yourself into disbelief, that encourages you to be a trader, that encourages you to create taxable event, which encourages you to over-speculate, which then ends up in you destroying your wealth, and all because you were fiat thinking rather than Bitcoin thinking. I know that's a lot to take in, so make sure you subscribe to this channel, make sure you hit the like button, make sure you hit the bell symbol, make sure you hit all, and YouTube will notify you, and I'll give you an update once we know what the hell will happen as a result of this EU. But what will it change in my action? Absolutely zero. I'll still continue doing what is, and if we get a market correction as a result of something stupid, then the EU is going to learn the power of proof of work, the point of proof of work, and what the impacts will have, which will allow you to accumulate at a cheaper rate so that you own more Bitcoin, so that you have built and protected your wealth for the future. Don't bet everything on Bitcoin, don't bet everything on gold, don't bet everything on the central banks. Make sure that you are thinking and prepared for all scenarios, and please don't be stupid taking one rhetoric and saying that's why you shouldn't own Bitcoin, or that's why you shouldn't own gold. Understand that there are pros and cons to all of these different asset classes. They fulfill different use cases, and the key to calm wealth creation is to be prepared for all outcomes. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some people are going to get really hurt by listening to what happens in the EU. Others are going to do really, really well by listening to other countries that are supporting the environment. I want to make sure that you are on the right side of this change. We're going to do it with peace. We're going to do it with love. We're going to do it with unity. And the world needs a lot more peace. So everybody, peace.